Good afternoon, everyone, and welcome to the City Council Special Study Session meeting of Tuesday, April 28th, 2026. I now call the meeting to order. Let's all stand together and say the Pledge of Allegiance. Ready, begin. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. Madam Clerk, would you please do the roll call?
Mr. Mayor, the record will reflect that all council is present.
Okay, we have one study session item tonight. Madam Clerk, would you please read the title?
Yes, fiscal year 2025-2026 mid-year budget update. And the presentation will begin with our city manager, Gallardo Daly.
Okay, so Cecilia, before you start, just for the ground rules, we're going to go with the staff presentation first, and council will ask questions. Then we're going to hear from the public. Public can go ahead and have 3 minutes tonight. That's not a problem. We'll go to the people in the chambers first. Then we're going to be on Zoom. It's more casual tonight. If you wish, you can use first names. You don't have to if you're uncomfortable doing that. During the staff presentation, if the council feels like it's important to ask a question at that particular time for context or whatever, just make yourself heard, and you'll be able to do that. As long as we don't interrupt each other, it's pretty much open. We'll have a discussion mode the whole time, and so I'll recognize you if there's more people that want to speak, but we want to make sure everybody gets all their questions and statements out. So with that, I'll turn it over to Cecilia to start the presentation.
Thank you. Good evening, Mayor, members of the City Council. As we review the current fiscal year budget and provide you with a mid-year update, I'm pleased to report that the city remains on steady financial footing and is projected to end the fiscal year in a positive operating position, as you'll hear tonight. This outcome reflects a careful balancing of revenues and expenditures coupled with careful budget management. These efforts have required coordination and cooperation across all departments. I'm very pleased to announce that through the efforts of the Police Department recruitment team and the Human Resources Division over the last year, the Police Department is fully staffed in the sworn ranks, and citywide, the city has a low number of vacancies left to fill. A great success story to tell. While maintaining fiscal stability has been a central focus, we have remained equally committed to advancing the priorities established by the City Council. Looking ahead, our approach remains grounded in achieving long-term fiscal sustainability, and this includes not only managing current resources responsibly, but also planning for the future obligations, evaluating ongoing service demands, and identifying any opportunities for operational efficiency. Before I turn it over to the budget team, I want to thank them for their outstanding work getting us to this point and looking ahead to the 26-27 fiscal year. They've been working around the clock. So I'd like to introduce our budget team from our finance department. We have here this evening Kingsley Okoreki, our financial consultant, Mark Koo, our budget manager, Anna Acosta Reyes, our finance manager, Paige Appel, our senior budget analyst, and Allison Tong, the senior budget analyst. So I'd like to turn things now over to Kingsley to start off the presentation.
Okay, thank you, City Manager. Mr. Mayor, City Council members, we do have a presentation for you tonight. We're going to go through a lot of slides, but just let me give you an overview, and then I'll turn it over to our budget manager here, Mark. First, we're going to go through a slide, basically the general fund budget that you adopted almost a year ago in June, just to remind everybody what was adopted and how we began, City of Costa Mesa began the fiscal year. Then we'll look at all the economic conditions, since then. Everything that we have identified have impacted our revenue, earnings to date, and our projections on how we're going to end the fiscal year in a couple of months by June 30. So we'll pivot and look at specifically, examine the revenues and some of the things that impact revenues and how we're projecting, And then we'll go on to the expenditures side of the budget, some of the key drivers that are impacting the budget and how we are going to, or how we are projecting to end the fiscal year. We'll summarize all of those. And as the city manager pointed out, your budget for the fiscal year will end on a positive note. At least you earned enough revenues to cover all of your expenditures. And then we'll pivot and look at next year's budget, our planning. We'll outline for you some of the things that we're looking at, some of the key issues that we think will impact that budget, revenue projections. On the cost side, some of the things that we think we need to estimate and put into the budget. We don't have any numbers for you tonight with regards to next year's budget, but we will be coming back to you shortly to share some numbers at the study session specifically focusing on next year's budget. So with that, I'm going to turn over to Mark to go through the details of the presentation.
Thank you, Kingsley, and good afternoon, Mayor and honorable council members. As Kingsley stated, we're here to remind you what the fiscal year 25-26 general fund adopted budget was. The general fund adopted budget, all encompassing all funds, total $224.9 million. Of that, approximately $186.9 million was towards the general fund. The budget last June was adopted, so it was structurally balanced without the use of reserves or ARPA funds. Within the current year's adopted budget, 54% of the budget was dedicated to public safety departments, which includes police and fire. The budget also includes a partial deferment for the CAN, the capital asset needs, in the amount of $1.25 million, as well as a partial deferment to the information technology needs in the amount of $1.16 million. The current year budget also included a prepayment to CalPERS for our unfunded liability. That prepayment amount was $31 million this year, and by preparing a prepayment in July of each year, we saved approximately $1 million. So had we not made that prepayment, it would have been $32 million. Moving forward to the economic outlook and overview, in late 25 and early 26, economic indicators in Orange County showed moderate but uneven growth with stable labor conditions and steady consumer spending. So even as inflation's pressures emerge due to higher oil and gas prices driven by the geopolitical tensions that we have currently in Iran. Sales tax was beginning to show some early signs of slowdown, but many industries that we have within our cities, our city of Costa Mesa is still anticipated to grow year over year based on this resilient consumer base that we have here. Moving ahead to the macroeconomic conditions. So macro meaning the larger scale of the economy. Negativity within the larger scale of the economy may have an impact to cities' revenue. So I do want to make that note that there may be a connection. How big or how small is yet to be determined, but in 2025, heightened volatility in the U.S. economy experienced due to shifting federal policies, including new tariffs and prolonged federal government shutdown. That disruption continued onwards to the beginning of 2026. Economic instability continued to intensify due to the current conflict that we have right now in Iran, leading to higher fuel prices and weakened consumer confidence. As far as the policy and market impacts due to those events, we also have immigration enforcements and lingering tariff effects, creating uncertainty across different sectors such as the labor markets, the real estate market, and the financial markets. An outlook for the cities, for this current city, revenue and expenditures forecast indicates that the conflict in Iran, coupled with elevated fuel prices and shifting household liquidity, meaning discretionary spending that the average household have, will influence the city's revenues and expenditure in the near and long term. So the economic outlook and overview, looking ahead, the headwinds, so these are the forces that are kind of against our ability to generate as much taxes as possible. To consumers and business continue to pose a risk to the city's revenue. And with key growth that may challenge some of our primary sales tax bases. So sales tax in Costa Mesa is unique in that it is the #1 driving revenue source, whereas other cities, typically property taxes is the highest form of revenue source. So what we like to say is when the economy does well and sales tax does well, Costa Mesa does well. But when sales tax and the economy goes slower, Costa Mesa is also impacted by that. And then we also have property taxes that may have a lagging impact because what happens today and the shortage of houses that are being exchanged and being sold, you may not see that impact for a whole year till the next fiscal year. So national and state level data may not be necessarily reflective one-for-one with Costa Mesa because of the composition of the businesses. So for example, in California, there's a big agriculture sector, but however, Costa Mesa, we don't have agriculture as heavily influenced in this city. And so that disproportionment within the demographic of the consumer base and the types of businesses may not be fully reflective in our city. So that's what we're trying to say here. And Costa Mesa, we are heavily in the consumer goods business as well as the auto sectors. So those are the sectors that we have to kind of look out for the trends. So moving ahead to the general fund overview. And as we stated, the biggest source of revenue for the general fund is sales tax. So sales tax makes up 40% of this city's revenue and is received typically 2 months in arrears. Property tax makes us the second largest, which makes up 34% of the city's revenue, and they are typically received between December and January and April and May, which is aligned when homeowners pay their property taxes. TOT makes up 5%. It's a tax that hasn't been increased in almost 2 decades. And it's received 1 month in arrears. And cannabis tax makes up about 2% of the city's revenue and is received 1 month in arrears. So with all of that being stated, the table that is being displayed demonstrates that property tax will end at slightly lower than what was adopted in the budget due to fewer home sales expected. So home sales were relatively flat. There wasn't much growth in the home sales sector, primarily due to higher interest rates. Sales tax, we are seeing an increase in sales tax, and the majority of the sales tax for this city comes in December during the Christmas shopping season. So that's when a large collection of our sales tax comes in. TOT is slightly increasing by $200,000 to $10 million. And as stated earlier, cannabis tax remains relatively flat. We're not expecting to see any growth in cannabis tax. So all in all, when you take all of the projected numbers, we are projected to end revenue just under $194 million, or approximately $7 million above what was initially projected when we began this fiscal year. Now, moving on to the expenditure side, we do want to bring up some key drivers to what impacted the expenditures. And so some of those key factors that have impacted expenditures include pursuing full staffing in our public safety operations, including the police sworn and firefighters sworn. There were also significant reductions in vacancies. There were approximately 55 vacancies in March of last year, and if we move forward to March of this year, it's about 35. So you see a 20 position reduction. And as stated earlier, there has been a growing cost to our unfunded liability. So this year, we're paying $31 million to CalPERS. We already have the number for what we're going to pay next year. That's going to grow to $33 million next year. So a big portion of this budget, even if we didn't do anything, would just grow because of the payment obligation to CalPERS. And we also have higher insurance premiums that the city pays, an amount of $2 million. But I do want to note that these high insurance premiums, these increases, is not subject to Costa Mesa. It's all municipalities, they're facing this higher in premium charges moving forward. So we expect an increase in that as well for the next fiscal year, but every municipality is facing that challenge. So when we look at the table for expenditures, the salaries and benefits, we're going to end the year at right under $146 million, primarily due to MOU cost. Operational costs, we're going to see a reduction of $1.5 million from the adopted budget. So operationally, we're going to end at approximately just slightly above $45 million. We also will transfer $1.2 million to the CAN for the capital asset needs, and $1.6 million will be transferred to the IT replacement fund. So once you take all of those factors, we're going to end at $193.8 million.
Yeah, if we can stay on this slide for a minute, I just wanted to elaborate a little bit. When you look at the first item there, salaries and benefits, you see that significant growth. And as Mark pointed out in the previous slide, okay, right now, the good news, as the city manager pointed out, is that you're fully staffed in your public safety positions. But at the time that this budget was adopted, there were some vacant positions. And it's doubtful, me looking at it coming from, present position here, looking at what was adopted, that it was, it appears that a net budget, for lack of a better word, was adopted. So when you have all those positions filled, all of that cost is what is being reflected in the increase that you're seeing here. And as well as, maybe some of the negotiated labor increases, I'm doubtful that any of those were incorporated in the original adopted budget of $137 million versus the $145.8. When you look at that $145.8, there are no surprises. Those are really funded salaries for positions that are approved and recruited and filled within your organization. Just want to make that point.
Thank you, Kingsley. And so we do have some achievements in this current fiscal year that we want to highlight. The city filled all police officer vacancies, so in the sworn classification, achieving full staffing. We also secured grants funding, including traffic enforcement grants, transportation grants, and federal earmark. The city maintained its really highly regarded AA+ bond rating. The city also earned multiple Governmental Finance Officers Association and California Society of Municipal Finance Officers Association award for delivering a balanced budget. We project a savings of approximately $100,000 at the end of this fiscal year, so we're going to end in the black. We're also projected to exceed the City Council General Fund reservance policy of $55 million by $6 million. And so that $61 million that we're going to end at is approximately 31% of our revenue. And so according to GFOA best practice, a city should have approximately 16 to 17% in minimum reservance relative to their expenditure and budget or revenue budget, which is typically in line, and we far exceed that 16 to 17% threshold. So
so now in summary, when you look at this summary schedule, just taking it in that 30,000-foot level summary, you look at your total adopted budget for revenue of about $186 million versus the 193.9. That's your pleasant surprise, sales tax, pleasant surprise, based on what Mike pointed out in a previous slide, the increase in sales tax. That's great news. On the expenditure side, just what I pointed out in the previous slide as well, is just that fully funding your positions and having recruiting and, really having full SWAT of employees in your public safety, in other essential areas to run city programs. So at the end of the day, you generated enough revenues to cover your base expenditures with a little bit of change left. Certainly.
Yes, sir. Yes, sir. Go ahead.
At some point, somebody had to upset the flow here. I'm just curious, it kind of leaps out at me, I don't know if it does anybody else, that the adopted budget revenues was 186.9, and the delta that we, our revenue was what, about $6 million in additional revenue? And then it does jump out at me that our we missed on expenses by about that same amount. And it begs the question, did we achieve the revenue and then found a way to spend it? Or that it just coincidentally, the $6 million in additional revenue happened to be consumed by these unforeseen expenditures, the insurance premiums and some of the, it just is glaring to me how they track so closely.
Yeah, and I have the same reaction as well, when we were looking at the details. And it's a coincidence, if you want long and short answer of it. Looking at the revenue side of it, we went through every single revenue, especially the big ones. The big two is what I focused on initially, your sales tax revenue and your property tax revenue. That constitutes close to 70-something% of all your revenues. And then we looked at the other ones, the smaller ones individually. And those revenue projections that we share with you here relative to sales tax and property tax, those are coming from our consultants. It's not something that we staff, made up. We have HDL, who we rely on their professional expertise to advise the city on those two big chunks. That's where really the rubber meets the road in terms of City of Costa Mesa revenues. So those revenues, we went through them, the rest of it meticulously, line by line. Then on the expenditure side, as I pointed out, I think, in my own professional opinion, looking at the budget, it was more like a net budget that was adopted. There were, assumptions that were made in that budget carrying over from a previous year as to level of vacancies that you will have in there. And those vacancies were filled, and most of them were public safety positions. So when you fill them, you're going to basically incur that cost. That's what happened on the expenditure side. There are some attritions on the operating non-salary side of it. If you look at it, because I guess the message from the city manager and administration during the year to really, everybody tighten their belt, make sure that our only spending was essential. There were some savings that we are projecting in that category of expenditures. So it just sums up that way. When I looked at it the first time too, my reaction was that, well, this kind of fits. It looks kind of almost the same, but it is what it is, and that's how it shaked out.
And evident on that, I'm sorry, was somebody else?
Yeah, I do want to add, if you look at the slide, Councilmember Bewley, for how it ended in FY 24-25, the 24-25 actual of 190, the growth trajectory of the expenditure is within line of what the city would normally traject. But because these budgets were adopted at a time of uncertainty, last year there was quite a little bit of uncertainty going on, the approach was really being conservative. And when you go conservative, sometimes you exceed those projections. But the growth, the final year end of this year projected is within line with what the natural growth of the city would be. Just based on those UAL unfunded liability costs, $2 million, and just a few additional staffing and the insurance costs, and you'll just get there right there.
And actually, you just pivoted to a question I had, and it's just part of my education on the unfunded accrued liability. I think we had anticipated 31 mil, and I think you said it went to 33 million, and that was
In July,
perceptually a larger amount than we anticipated. What's the cause of that, just to educate me on what causes fluctuation in our unfunded liability obligations?
There aren't any fluctuations. We actually, that's a schedule that we get from CalPERS. That payment schedule is actually built out all the way to maybe for the next 4 years or so. Okay, so they give us a forecast. The unfunded liability, the cost that we have to pay for staff, it's going to continue to grow. So this is not, there's an actuarial study we have from CalPERS that provides us with that number. So it's not a surprise to us. It's something that we have to account for.
But I guess then my question is, if we had accounted for it at 31, and you're telling me it came in at 33,
No,
so then I misunderstood you.
The 33 is what we're going to pay next fiscal year. So the 31 is what we're paying this year in FY 25-26, and 33 is what we're going to pay in 26-27.
But you're showing, unless I'm missing something, I'm looking at page 12, where we talk about the general fund expenditures for 25-26. And I understood when you were talking about how we got that increased expenditures that we hadn't foreseen in 25-26, that consumed a good chunk of the good news revenue increase.
Yeah.
The way I understood in reading page 12, that unfunded accrued liability going from 31 to 33 was applied, or it was impacted in 25-26, if all those numbers didn't lose everybody.
Yeah. We're on this page, we're showing both of what the drivers and what the actuals are. And so the 31 was anticipated. There were no surprises there. However, it does make up for a big chunk of the final year's number. And so that's what we're trying to state here, in that it is a highlight, that we did want to highlight that cost is prominent within this year's expenditure.
Okay, so 25-26, we had budgeted for 31 and
Correct.
we're paying 31.
Yes.
And what you're showing me here is a big chunk of those expenses, but it wasn't a driver
No.
of the delta, that I'll call it, the increased expenses. So then I guess my next question is, since I misread this in that the 6 million in additional revenue was eaten up by these expenses, I've just lost 2 million there. Are there any key areas where we had unforeseen increased expenses in 25-26 that consumed that revenue delta?
Okay. Well, going back to unfunded liability, I think what he communicated was that we knew what the number was, but we paid we prepaid and saved $1 million.
Okay.
I think that's what was communicated here, that prepayment of it saves you interest. You can break it up, into 12 installment payments and pay interest on top of that. At the end of the year, you would have paid $1 million more. Now, in terms of some of the other things that accounted for the expenditures that we didn't think about, the only thing I can identify based on my analysis of, as we analyze this budget is the assumptions that were made going in were off, for lack of a better word. We assumed a certain level of vacancies, and in the budget that was adopted, that's why I said most likely it looks like a net budget that was adopted. But when all the positions that were approved were filled, those are the costs that are being reflected here. And so you can adopt a budget, you have a gross budget of say 145, and you assume some ridiculous attrition factor that you're going to have a certain level of vacancies. If you turn around and fill those vacancies, you're not going to achieve those. So that's essentially what's happening here. The positions have been fully funded and spent. So that could be a surprise, but those are known positions. Yeah. And there was an effort on the council side and staff side to actively go out and recruit and fill out those positions.
And yeah, so I guess what I'm coming to the conclusion, the primary driver of the consumption of any additional revenues was our success in reaching full staffing in the public safety and a lack of attrition. The estimates or the actuarials had predicted a certain level of attrition that didn't happen. Yeah. And then we were successful in filling vacancies.
Yes, that's correct.
Then I guess a question while we're on this, and I don't know if this is staff in general or city manager, I hear a lot that we're at full capacity and we have our full staffing numbers. And again, since I hadn't been involved in, how are those numbers, or when do we go through an evaluation to determine whether we're adequately staffed, overstaffed, understaffed? Do we do that every couple of years? Or obviously we've got a number that we want to get to and we want to attain, we want to achieve. How do we determine that number? And when do we determine that number?
If I could just jump in here. Every time there's a vacancy, we evaluate the position to determine whether or not it's necessary to fill it. Whether it's in the IT department, the Parks and Community Services department, the Finance department, Development Services. We go through a comprehensive evaluation over whether it's needed. I can tell you now that given the service delivery that we provide, we're certainly not overstaffed now in any way.
Yeah, and I didn't mean to imply that we are, and in fact, to pivot off that last comment, just my personal observations after being up here for a year and dealing with members of the public, when the service aspect of our city operations, I hear regularly that maybe we're understaffed on permitting and code enforcement and business licensing inspection and things like that. So by my questions, I'm not implying or taking issue. I'm just curious about the process and do we constantly evaluate and do we constantly review the necessity and do we constantly determine are we properly allocating resources where they're to the most benefit of the community. Okay, well, thanks for letting me, I've got other questions, but that's good for now.
Mr. Mayor,
Yes.
can I jump in though? Because I think
course.
this is part of my questions. So we have always held vacancy placeholders. We've always financially accounted for positions we might hire. So I guess I'm confused about now we're saying that we didn't do that. We didn't do that right.
Correct. I can give you some perspective.
Please.
I actually have some vacancy reports in front of me just to show you the city was heavily dependent on those vacancies to stabilize the budget, okay? So in July of 2024, there were 73 vacancies in the city. When you move to that same time in 2025, that vacancy dropped down to 52. So now you have 20, the savings have gone down from those 20. Now, when you move to today, we have numbers as of March, that 70 vacancies have dropped down as of March to 34. And so naturally, those 40 positions, they're helping to keep our response time quicker. They're keeping this city a first-class city. A lot of people want to come here. A lot of people want to live here. You know, a lot of people are priced out of this city because of the high standard of living that our public safety departments provide. When there's an ambulance call, our fire department responds immediately because of these staffing levels and the success of that. We want to point that out, but within a 2-year period, you filled 35 to 40 positions, and those are actual costs. But
I understand that, but I'm trying to get to the point where we adopted a budget that showed 137 million, and now we're going to spend $8.5 million more than that on salaries. I had thought that the $137 million budget included some amount of accounting for hires that we might make. Was that wrong? We didn't count for those hires at all?
In my humble opinion, those were not fully accounted for. That's why I used
How
the term.
how many of them were not fully accounted for?
We can go back and drill down and see how many, because what happened here in my look at the budget was that even a year before that, there was sort of an assumed number of savings that will, come through as a result of the level of vacancies. Okay, and those numbers were carried over to the budget in 25-26. Even though there's this plan here that we're going to be aggressive in filling positions and make sure that our public safety positions were fully funded, but the numbers here were never really, reduced, and the budget expanded to include it. Maybe the reasoning was that as those positions come in, you go through, in some cities, come back and say, realign the budget so we can make sure, we're accounting for them.
Understood.
So that 137, I'm telling you, did not include all of that.
What is our fully loaded cost per FTE on average?
about 150.
It depends on the
Fully
position.
loaded.
It depends on the position.
Depending on the position,
I
but-
don't have that number in
Yeah.
front of me.
It depends on the position for
yeah.
sure.
What is our multiplier? So if someone makes $100,000, what is the cost to the city when you add in their benefits and PERS and all of that?
It depends on the classification. So it varies. It varies depending on the classification because certain classifications have a higher retirement obligation.
Got it. So $8.4 million, let's call it 250K, right? That's the number I use at work. That's 34 positions. So we're talking about 34 positions that we basically hired up that we hadn't accounted for in our vacancy rate. Is that about right?
If I could just
if you're doing
step
back
in
up the
here.
envelope calculations, I don't know that you can reduce this to number of positions because in addition to hiring those positions, some came in at this level, some came in at that level. There may be longevity and the load factor on top of the salary could be different for everybody. And then, if there are some negotiated salary MOU that were not maybe previously included, that has to be reflected. All of that went into effect.
So do we have that breakout? I mean, is some amount of this potentially costs from MOU that we hadn't previously agreed or that we hadn't previously recognized or accounted for in the budget? Or is this, I guess that's what I'm trying to, let me back way up, right? 30,000 foot view. Is the $8.4 million, which by the way, I'm a little surprised that this didn't come to council when we overspent on salaries because typically we would approve that at mid-year, but I'll set that aside. 30,000 foot view, is that 8.4 just that we weren't previously accounting for positions that we then hired? was it a reflection of, and for the public, sorry, MOU, I'm referring to agreements that we make with our employee unions that perhaps we didn't account for earlier? Because those, those can change. Some of them take effect mid-year. Sometimes more people qualify for more different benefits. Or is it something else?
It's a combination. It's a combination of the step increases. So each employee gets a step increase every year. You have MOU increases depending on the bargaining unit.
Yeah.
They can range between 3 to 6% depending on which bargaining unit that person or that employee falls under. So when you multiply that by 600 employees, those are factors that contribute to that $8 million number. It's not one thing or another. It's a combination of all of those factors put together. So increased capacity, so filling those vacancies in public safety. You have your step increases. You have your MOU increases. And don't forget that this $8 million, if you look at it, take $2 million off of it, because $2 million of that $8 million difference belongs to the UAL, the payment to CalPERS. So when you take that $2 million from there, the difference is only $6 million, because $2 million off the top of the head goes straight to CalPERS already.
Got it.
Okay.
Can I just ask a really quick question on that? I thought with Councilmember Bealey's questions, we confirmed that the $2 million is not part of the additional expenditures for this fiscal year.
What we're saying is that it's not, but it makes up for that projection. So the projection is compared relative to the adopted budget. So it's not a surprise. So I want to clarify that $2 million is not a surprise, but it is a factor within that difference. It is factored within that difference because that payment is actually part of the expenditure. It's part of the.
Are we paying more for the unfunded liability in this fiscal year than we budgeted for, or not?
We're not paying more than what we budgeted.
Okay, then I don't understand how that's contributing to the difference between actuals and projected. I'm sorry, then adopted and projected.
And to Kingsley's point, to Kingsley's point, it's aligned with the natural growth trajectory of what the city would normally assume. So that's part of it. That $8 million is part of if you look at the prior year, so if you look at 23-24 to 24-25, that growth, that difference was even greater. That it was 125 million. The following year, it was 138. It was a $13 million delta in the salaries and benefits. And so.
Let me ask my first question again, because I really want to nail this to make sure I've got it right. And this is consistent with the answers that Councilmember Bealey was asking earlier. We budgeted in our adopted budget, we had $31 million for unfunded liability.
Yes.
Yes.
In our projected budget, it is $31 million for unfunded liability.
Yes.
Okay.
Correct.
So there is no delta
No.
between our adopted and projected budget due to unfunded liability.
No.
Okay.
Because
the difference column, the 8.4 in the difference column, is a delta between adopted and projected budget.
Yes.
Okay. But zero of that is contributed by a future increase in unfunded liability.
No, because at the beginning.
Am I missing something? I'm sorry.
No.
Am I crazy?
Yeah.
Okay. Okay.
No.
I get you.
You
It's a good
knew
question.
the number of funded liability when you adopted the budget. So that's not part of the surprise. There is no surprise there. Yeah, I'm not sure,
Yeah, and to be clear, not only is it no surprise, it is not contributing to the 8.4
No, it's not
delta on our
contributing to
screen.
it's not
Okay.
contributing, what I'm looking at to the 8 million. What I've said earlier, the contributors to the $8 million is that a net, for lack of a better word, okay, the assumptions that were made in formulating that budget were off.
Yeah, I get that, and I
Okay.
stole the mic from
Yeah,
Councilmember Mar. I
and-
do have specific questions about that. I want to get to the numbers, right? You're
Yeah,
telling
yeah.
us sort of examples of things that happen, but
Okay.
we should know these numbers, right? We know
Exactly.
exactly how much we are adopting for in terms of salaries and benefits. I'm acknowledging that I'm stealing the mic. Are you
Yeah.
okay? Okay, okay.
And I
What is the vacancy rate is something that's been in every budget since I've been on this dais.
Mm-hmm.
I thought that was about 4%. Is that right? What is our vacancy rate assumption that we build into the budget? This is referring to this thing
No.
you're
I'm glad
saying
you-
is unique.
I'm glad you asked that question because that was the question I asked. Okay, what was the vacancy rate? You know, the attrition factor built into this budget.
Yes.
And I looked back over a couple of years. It wasn't a percentage, it was a number. Somebody put in a number of $4 million. Whether that, you know, when you calculate it back to total expenditures, it amounted to 4% or whatever percentage. But, you know, that $4 million was carried over from year to year.
Okay, and so
Okay.
I want to make sure I understand. So the $4 million is
$4
the
million.
assumed salary savings, acknowledging that not every position that we have approved in the city is going to be filled over the course of the year.
Yeah.
Okay. So, okay.
And that was based on the level of vacancy that you had a couple of years ago, including all the public safety positions. So
Yeah, if I
if-
could just clarify, that number that Kingsley has identified is just specific to one department. There was not an attrition percentage, but as he stated, an actual dollar amount that was identified for certain departments in the city, but not all departments. But that
Right.
close to
Okay.
$4 million number was specific to the police department.
What's the number for the whole city?
4.4 million.
So 4.4. So in our budget, we have an assumption that there will be $4.4 million of unspent salaries and benefits because we're not fully staffed throughout the course of a year.
Right.
Correct. A point in time.
Is that correct? 4.4 million for the whole city?
Yes, for the whole city, almost 4.4.
Okay.
So we overspent by 12.8 million?
Right.
Well, no, I mean, if you take numbers in isolation there, you know, I mean, this is a net difference because we look at the way the accounting structure is, you know, it has your salaries, it has your regular sworn, non-sworn, part-time, overtime, you know, your benefits, everything, your retirement, everything is all lumped into salaries and benefits. So when you look at it, some, you know, you include that, salary savings factor on top. Some you exceed, some you don't. At the end of the day, the net of everything in terms of your total salaries and benefits budget, which is inclusive of everything, you know, we're saying that, you know, it's $8 million more than you budgeted.
Okay.
So it's total.
Yeah.
So if you try to do the arithmetic backwards, you know, pick this number and that number, it doesn't
I
work.
don't think I'm picking
And we can
numbers.
give you the-
I think I'm understanding that we adopted a budget that accounted for salaries for people who weren't here.
Right.
We hired those people, and then we kept hiring for another 8.5 million, is what you're saying.
No, what I'm saying is that you adopted a budget that, you know, assumed this level of vacancy,
Yep.
okay? And those vacancies were filled,
Yep.
increasing the expenditure here. And in addition, the other element I want to point out is that I'm looking at some details as well. You adopted a budget that says you're going to spend $10 in overtime, okay? But you ended up spending, you know, maybe $40 in overtime. So in your straight salary, you may have some savings there that you plan will offset some of that overtime. You know, some are not one for one, but, you know, and you have this other factor here. So when you total everything up, that's your difference.
Yeah.
So
Look, I'll just, and sir, I don't mean any disrespect. This is my 8th year up here at this point, so I've seen a few budgets and mid-years. I think what gives me pause, and the reason I'm drilling into this is because we have nothing else to go off of other than what staff tells us they expect to spend, right? This isn't my credit card statement I can check on a monthly basis. This is, I rely on staff that this is what we're budgeting for. And so when we have a pretty significant difference between what we budgeted for and what we actually spent, it is not so much understanding what every dollar was, but more what is my level of confidence that when we commit and sign off to a budget, we are going to deliver that within a margin that I think this council can live with. And so a significant deviation from that, a 6% deviation, is something that I think we need a little bit more information to drill in on. So that's where I'm coming from with this. I'm not trying to belabor this question.
I'd like to belabor it a little bit.
Well, I
just want to
have a
understand
few
the
more
numbers.
questions, but
Okay.
I guess I'm done with this for now. I can go to some other stuff, but Mr. Mayo,
Mayor, can I just jump in to close the loop on these numbers?
Hold on one second.
Yep.
Do you still have the floor, or do you?
I have other questions, but they're about different topics, so I want to let other people get a chance to talk.
Yeah, I just want to follow up on these
have the-
numbers. Okay, thank you. Okay, so we, into the adopted budget, we built in an assumption that we're not going to spend 4.4 million because there's going to be vacancies, right? So reverse that, if we fill all of those vacancies, right, for positions that we adopted, if it's a wonderful hiring year and we fill those vacancies, our budget would be 4.4 million, our spending would be 4.4 million higher than we planned because we ate up that assumed vacancy. Am I understanding that right? Yes, okay. But we're seeing a difference of 8.4, and we have vacancies.
Yes.
So there's other, we're hearing that one of the reasons for the overrun is that we had a great hiring year, right? Which is great.
Right.
But at most, that accounts for 4.4 of the 8.4 on our screen. I'm understanding this correctly, right?
Yeah.
Okay, so there's, but it doesn't account for even 4.4 because I heard that we still have 34 vacant positions, which is out of 600 positions, just shy of 6%. So we still have a 6% vacancy factor, and there's at least 4 million of additional spending unexplained. I hope you can do it tonight. If not, I think it's really important for our council to understand exactly the contributors, at least at the $1 million level, right, to that 8.4 additional extra spending. Okay, that's what I wanted to close the loop on. Thank you. And I want to make sure I'm understanding those numbers right, because
Yes.
the vacancy thing is confusing. Okay. Yes.
No,
okay.
I get you. And, we're highlighting the big numbers. And that attrition factor there is a big one. Now, if I'm looking at the details of it, and there's also, you exceeded your overtime budget in a significant number as well.
What is
Okay,
significant? Is that the 4 million extra?
Yeah, that's close to $4 million here.
Do you have a number in front of you?
There are some savings in several other areas. So the biggest two chunks that I can see where, was unrealistic in terms of the budget that was adopted is the salary savings factor as well as overtime. Overtime, budget was adopted at the very, the adopted budget, it's about $4.8 million, and we're projecting the year-end overtime of almost 9, so over $9 million. So, but in other areas, there are some savings, so it's.
What was the delta on overtime? I heard you read what our adopted was and then what the actual.
Our overtime budget, overtime budget here was about $4.3 million.
4.8.
Is it 4.8?
4.8, yeah, 4.8, correct.
So comparing
about-
projected to adopted on overtime is 4.8. So that's a huge contributor to the
That is a huge
8.4.
contributor as well.
Okay. And then another big one, but maybe not quite the full, is this, more hiring or a lower vacancy rate than planned, right? Is there another large contributor to the additional spending?
Those are the two big ones. You
I guess
have,
that would make sense in the salary bucket.
yeah, you have exceedances and,
Okay. And then do we know offhand how that 4.8 in overtime compares to a typical year?
It's actually in line. So the overtime spent isn't any big surprise because last year we actually spent in total 10.2 million in overtime. And so this year we're actually scaling back. The final overtime number for this year is going to be 9.7. So the actual overtime is, okay, if, in my humble opinion, we ended last year salaries and benefit at 138.5, okay? Here's the easiest way to kind of reconcile this, okay? In my humble opinion, this salaries budget should have grown to 142, 143, but rather because of those economic conditions that were faced when this budget was developed, okay, there were a lot of uncertainties during that process. And so the approach was to deliver a very meticulous and carefully budget of 137.3 on the salary side. So that budget adoption, in my humble opinion, is a little skewed because of the conservativeness of the nature of the environment that we were in last year. And so, but had it been reflected to what the actual cost would have been, that delta wouldn't have been that great because we ended last year at 138.4. Just take that as a note. And so if that budget was right-sized to where it should have been, you're going to see, at a minimum, that budget should have been 142. But what we do plan on doing is when we bring the next 26, 27 budget to you, you're going to see a tremendous growth in the salaries. And these are the adjustments of what is going to be the actual cost. And so that's what I want to let you know is that that growth factor is going to be factored in.
So
I yield.
may I ask a couple questions just on this line? So I think what I hear you saying, Mark, is so at 24, 25, we're at 138.4, which
Yes,
is on the screen.
correct.
Okay. Now, at that time, we intended to continue to fill our vacancies, right? Correct?
Correct.
Okay. And we knew that there would be step increases. Those increases are not going down, right? Right?
Yes, they're going up.
And in each of our memoranda of understanding with our bargaining groups, none of those memoranda call for a reduction in pay, right? So if you look at all those things, you say, we're planning on filling vacancies. We're going to have an increase in step. People are not going to make less. They're going to step up. And our memoranda of understanding are going to come to a higher scale. Logically, you'd expect the adopted budget for fiscal 26 to have a higher number than 25.
Correct.
correct.
But what we did last year is we had a slightly lower number, right? And you're saying the reason for the lower number is because we were concerned at that time about certain things that were happening in the economy. This was, shortly after Liberation Day, where we're going to get, I remember talking about that, where we're going to get tariffs and things of that. It was uncertainty. And so we right-sized the expenditures of salaries and benefits to address an expected reduction or flattening of revenue
Right.
because of external economic factors. But by reducing the amount of our spend on salaries and benefits, it wasn't realistic because it didn't reflect what was happening within those factors that I laid out. And those things are going to happen irrespective of the revenue in that we're getting, depending on what the economic factors are or other factors. Am I right about all that?
Correct.
Correct.
And any given year, Mayor, to your point, the city's bottom line, every year, the bottom line, it's going to grow by $6 to $7 million, okay? And that's just your bottom, that's the easiest number to follow. It's the cost of doing business to pay for these unfunded liabilities, to account for the step increases, to account for the MOU increases. Because those overtimes, they're not the driving factor, because they actually remain flat year over year, but it's all of those forces that is going to drive your city's budget by $7 million annually.
Thank you. Okay.
Can I do a quick closeout
Mike?
question on,
Yeah.
on overtime and salaries and these issue? It looks, so what I thought I heard, 24, 25, about 10.2 million in overtime. 25, 26, we saw a slight downtick to 9 million. And now what I'm hearing tonight, it looks like, hallelujah, we're fully staffed. Would it be a fair prediction that being fully staffed going into 26, 27, we could expect a downtick in overtime, or do I not know how employment works?
We don't have those numbers yet, you know.
But
and-
would you expect just those factors? You would expect more overtime when we're understaffed, and so your staff is out of necessity having to spend more time on overtime.
You can, you know, that's a fair expectation, you know, that, you know, you will see a downward trend in overtime when you're fully staffed. But, you know, staffing and in public safety and in other departments, you know, it's subject to there's a lot of, you know, variances there. So you know, we're taking a look at it for next year. The point here is that, you know, at some point you begin to right-size your budget, and that's what we're looking forward to for the next year's budget.
And I think you got my answer. Then literally the last thing before we move on to somebody else, that last line of questioning from John or Mayor Stevens, where you anticipate just natural growth and factors, about a 7 million increase across the budget every year. That's factored in when you, for instance, in the 25-26. So when we went from the 24-25, and then we were starting to propose a budget that we adopted for 25-26, it factored in that annual cost of living increase, for lack of a better term. And then here we are with the actuals, we're still at this 8.4 million difference.
Well, what we're saying, basically, you know, I think when you look at it over a trend, is that if your budget increases about 7 million, for lack of, you know.
Yeah, we're just using that number. I'm not going to hold anybody to
Don't
it
hold me
tonight,
to
okay?
it.
Yeah.
Let's assume it increases $7 million every year. For the current budget that we're looking at that is about to end in June 2026, the point we're making here is that all of that increment we're not taking into account. You know, maybe based on the circumstances when you adopted this budget, maybe based on some of the outlook or what was happening, all of that was not taken into account here. What we're bringing to you here, it's really a true up of giving you a true picture of how you're going to end this fiscal year. Now, in developing next year's budget, we're going to take a lot of those things into account, knowing fully well where the city situates right now in terms of the number of employees that you have approved and funded. And we're going to make projections, you know, based on that.
And sorry to cut you off, I'll jump in. And city manager kind of commented in my ear here, and I think it was, to me, it was succinct, and it made it helped me understand possibly what happened in 25-26 when we see that dip. It was maybe we didn't factor in and again, we're just using the 7 million number, what would have been the expected general annual year-over-year increase. I guess they were being hyper-conservative, if you will, that year, or trying to really sharpen their pencils, maybe because we had some difficult economic winds we were addressing. And now here we are with the reality what was tried not to be accounted for actually did occur. And it's showing itself up now at the end of the year.
That's a fair way to put it. Which is why I said if you're doing back of the envelope formula here, it doesn't really, get you to where you want to get. You want to look at the budget and be comfortable that it's right-sized based on the level of service that you deliver and the level of staffing that you have. And it's basically right-sizing your budget. You could dwell on, if you look at the numbers, some of the numbers, like I said, I've used the word net or unrealistic, but maybe the circumstances around then, when the budget was adopted, called for it. There were some issues or whatever that being conservative at the time was necessary but the reality, it's what the reality is.
Kingsley, I've got one more question, or
Yeah.
maybe it's probably for Mark more
Okay.
than anything else, because you have the more historical knowledge. So this number that we're fixated on, the salaries and benefits, historically, over time, has that tended to go up every year?
Correct.
And 25, 26 was an anomaly.
It's an anomaly.
Thank you.
That number typically goes up.
Okay.
Yeah.
Arliss?
Yeah, so want a clarification based on my earlier questions. So we talked about our budget, we build in this assumed vacancy, right? This assumption that we're not going to fill all the positions that we've approved, which is normal. That 137.4, I understood to be the salaries and benefits associated with all of the approved positions minus 4.4 million. Is that not accurate?
Can you say that again? I'm sorry, I lost your logic there.
Yeah, okay, so my understanding with how we budget, like what's in the adopted budget for salaries and benefits, we've got a whole table of positions that council has approved.
Right.
That's the 599 positions, I think, right? And we know the salaries and benefits tied to each of those positions. So we
Right.
know what the number would be for salaries and benefits if 100% of those positions are filled. And then we subtract 4.4 million, assuming that not all positions are going to be filled.
Right.
Is that what the 130 or the 137.4 represents?
Yeah, well,
Go ahead.
137.4, yeah, the adopted budget. Yeah.
Okay,
That's fair. Yeah.
okay.
It assumes that attrition factor.
It assumes that we're going to have 4.4. My understanding from this conversation is that it assumes that there's going to be $4.4 million of salaries and benefits not used
Right.
because we're not fully staffed.
Right. So if you add back that 4.4 to the 137, that's 140. That's almost 142, 137.8.
Say that last part again.
No, I mean, if you look at it from that perspective, that the 137, you said, is net of that 4.4, right?
Correct.
Okay. If you add it all back and when you're fully staffed, you're going to have about 140, 141, 142?
42.
That would be your gross budget,
Okay.
right?
Yep.
That's, okay.
But we're not fully
So-
staffed. We have 34 vacant positions. Right?
Yeah, but remember, as city manager pointed out, that was not across the board. That was just on some, departments like public safety. That was a chunk that, if you look at the time, 16 sworn vacancies alone is close to $4 million. Not every department had a vacancy rate assumed because most of the other departments it was tight. There was no assumption unless somebody retired or, somebody, quit to take another job, the most you can get out of that is maybe the 3 months or so it takes to fill those positions. But the actual assumptions that were made was when you were carrying these full public safety positions, it was never adjusted. That's the point I'm trying to make. And if you look at that formula, and it's not across the board, not all departments were assigned an attrition factor. Most of it was public safety. So if you fill all those public safety positions, and we're, back of the envelope calculation here, 16 positions is approximately $4 million. So, if we assume we're going to fill, all of it, maybe you need more than the 4.4.
Okay. If you just said if we're going to fill all of it, we need more than the 4.4.
It could be.
And
I mean,
if that's the case, then my understanding then of this 137 is not right. My understanding of the 137.4 is that it's total cost of all positions minus 4.4.
Yeah.
So if we're spending an additional 4.4 on salaries and benefits, that implies to me that we have all positions filled.
No. I mean, the 137 that you're looking at is, the gross is 142 minus your savings factor, then you adopt a budget, a net budget of 137.
So the savings factor is quite a bit higher than the 4.4. So, okay, here's the numbers that would be helpful.
Okay.
Hopefully you have them now or can get them on this call, because I'm getting actually more confused through this process. We know what the number of approved positions is for the city, correct?
Yes.
Okay. And we know
599.
the classification of all of those positions, and we
Correct.
know the salaries and benefits tied to all of those positions, right? So if 100% of the approved positions are filled, what is the cost to the city?
Okay.
I would like to know that number.
Okay.
And then I'd like to compare that number to this 137.4.
Okay, we can bring that number
provide-
back to you
Okay.
for sure.
provide
Yeah.
that number.
And what I heard on this, during this meeting is when we adopted this budget, there were 52 vacancies.
When we adopted this
Today,
budget.
there are 34 vacancies.
Yeah, today.
So we have hired a net increase in 17 people. Those are the numbers I'm writing down, and I'm going to follow up with. Okay, is it 18? Okay. Thank
I
you.
can provide you those numbers.
Yeah, we'll go back and provide you those numbers.
Okay,
Councilwoman.
Mr. Mayor.
Yes, Andrea.
Yeah, so, I mean, two things, just Councilmember Reynolds, like, we never, even the vacancy factor that we included, never assumed full staffing. It was like, what's the most likely to get filled? It was never like projecting all of the vacancies total. And so there would be a fudge factor between like what was built into the budget and then like what was actually.
so we have two vacancy factors.
Yeah,
That's
basically,
what's not
we have an imaginary vacancy factor that we never actually use because we never expect to actually get to
Yeah.
full staffing. So that was always backed out a little bit. So don't expect the numbers to like match the actual number of vacancies in the city.
Yeah, well, I want to know what those
Yeah.
numbers are now, right?
Get it.
Because we've approved positions that we are not budgeting for, that's a whole other conversation.
Agreed. And then just real quick, in response to the mayor's comments, like, look, like I said, been here for 8 years, recognize the costs go up, recognize that we want to hire more people, and we would expect salaries and benefits to go up. My challenge is with the huge amount of the delta between adopted and projected, and that's the part that I'm focused in on. So to be clear, I'm not suggesting that I'm surprised that any of this went up. I just want to have a level of confidence when we approve a budget that we're going to execute on it. So that's what I'm hung up on. I also want to come back to the fact that we keep referring to public safety. My understanding is that PD is at full staffing. I do not believe that fire is at full staffing. Can someone?
Fire is currently not at full staffing. Fire is currently in the recruitment process of approximately 5 firefighters. And they're also, fire department is currently, obviously you have the vacancy and the chief with the interim chief position. And so, but there is an active recruitment out for 5 vacant firefighters.
So to be clear, when we talk about this increase in staffing and the impact on the city overall, there are still departments that are not fully staffed and some that are and potentially have more staffing than we originally accounted for, and net we're close. Is that
There are some, but what I can say is when we do bring the study session, when we come back to you in study session in May, the second week of May, you're going to see a tremendous increase in the salaries and benefits. And that's this team's effort in trying to capture every single one of those costs. And so, honestly speaking, we're going to do our best to provide you with the numbers that's going to be true to what this next year's budget is going to end at, okay? And so you're going to see that. It's going to be reflective. So I want to bring that up as just as a cautionary to you, just to let you know that those numbers are going to grow. And it's going to be reflective of what those costs are going to be. And so with this, I have to go back to how this was adopted in a unique time. And so maybe there was some conservatism in developing this budget. But we now have to go back to what those true costs are going to be. And they're going to be pretty eye-opening when you see the next year's budget.
Okay.
Do you want to go forward with the rest of the slides?
Yeah.
Oh, I thought we were done.
No. And then we'll get to public.
Actually, before public, I wanted to actually talk revenue for 2 seconds.
That's
but
okay.
we've
That's good.
covered a lot
Let's
of
go
it.
through with the slides, and we'll
Yeah.
see if the council has more questions.
Next slide, please.
This is a reflection of the fund balance. We ended the audit for fiscal year 24-25 just slightly under $61 million. So even with all that stated, we do anticipate $100,000 savings, $100,000 savings at the end of this fiscal year, meaning that there'll be $100,000 more in revenue than expenditures. So
Now, let me add to this. On this slide, the good news here is this, that irrespective of, your budget challenges in this current year, that your reserves are intact. You have, the council policy that actually calls for a total of $55 million worth of reserves. Restricted, committed, or assigned in these various categories are intact, and you're not tapping into it. So the city, on account of this, the credit rating is solid, and the outlook is solid as well. Just wanted to point that out. From the previous slide where revenue exceeded expenditures by just 100,000, you're adding 100,000 to this fund balance. Yeah,
Well,
so.
just on this reserves thing, okay,
Yeah.
so this is, everybody says this, $55 million, we're at 60, we're above, blah, blah,
Right.
blah, blah, blah. And they talk about the council policy. In fact, the council policy, which was set at $55 million many years ago, had a escalation provision.
a
So
CPI factor.
if you apply the PI factor, based on the council policy that was adopted way back when,
Right.
the benchmark or the target should be much higher, something in the 70 millions, whatever. I'm not going
Right.
to do the calculation. Now, I'm intrigued by the statement that was made by Mark about the best practices. You cited some source and said it was, I think, 16% of the overall budget and stuff. So my question to you is, do you think it would be a worthwhile exercise for the city council to go back? Because I happen to be one of the weird guys that's actually watched that meeting by the city council years ago. And again, everybody who's ever come up here, I respect. It just didn't seem to have kind of the analytical rigor that we have established here on with this 7 up here, with all respect to the other folks. Do you think it would be a worthwhile exercise between now and the time that we leave the dais to go back and take a look at at the reserve policy.
Absolutely. It's definitely worth looking at because the CPI, if you were to grow it by 3%, you have to look at how achievable that percentage is. Because every year your MOU increases and revenue needs to keep up just to pay for those increases. And so when you end the year in the black, even at $100,000, it's actually an achievement unto itself. And so when you're saying that you want an additional 3.5 when that policy was established, you have to look at what operational costs truly are and see how achievable that number is. It's worthwhile.
And another thing, just while we're on this, and Kingsley, you tell me if you think that this is a pertinent factor, is we've been through the ultimate stress test since the reserve benchmark was made in 2021, right? And we've made all the various adjustments, and here we are. So I think, personally, I appreciate you agreeing. I do think it's something worth looking at. We only have so many more meetings left and so many more hours in the day, but I think it's something that before we fade off into the sunset, which four of us will, it's something we should probably take another look at.
Yeah, I totally agree. The $55 million number, the way it was set, if you look at it and the components of that, it's more conventional today. If you look in the middle of this slide, you see what's labeled economic reserve. Okay. That economic reserve is what a lot of cities will say, consistent with the Government Finance Officers Association recommendations, that you up it to maybe 16-17% of your budget, and that serves as your emergency, sort of safety net. In addition to setting aside money for your, workers' comp or your compensated absences and all the other things that were listed then. So that portion of it, that you could say, perhaps. I'm agreeing with you, Mr. Mayor. I think if you guys look at it, it would be a good thing to look at it again and reset it, consistent with what's obtainable today.
All right, page 17.
All right, so in summary, the general fund is projected to end balance relative to revenue minus expenditures, despite of all of the economic and geopolitical volatility. Sales tax remains a strong revenue source of the city. It's still growing, but at the same time, I do want to state that it's vulnerable because we have fuel price spikes and tariff impacts that haven't been known yet. So these numbers, because we're 2 months in arrears, we won't know the full impact of the conflict that began in March in Iran until later this summer, okay? And property taxes and hotel taxes, TOT, are performing near expectations, while as cannabis tax are flat. So the city's go-to is definitely the sales tax. Moving ahead to the FY 26-27 outlook. So revenues, we're looking at revenues ahead of when they're going to end on June 30th, 2027. So we're looking 14 months ahead to see where those numbers are going to land. However, with that being said, under leadership of the city manager, we are devising cost containment as well. So we're looking from within on how we can tighten our belts. And some of what we're doing is we're focusing on core services. We're limiting our expenses. So we're looking at things that are non-essential and looking at those and exploring other funding sources, such as grants or partnerships that we may pursue, and different entitlements. So the 26-27 budget will include a 5% target that we had for every department. So departments have been super cooperative in helping us achieve some kind of savings. We'll also put in a more true attrition factor to the budget of our size and our current vacancy rate. So we do want to update that in order to be reflective of what that number is going to be. Also, considerations for the next fiscal year budget includes the repayment of the CAN. So we're going to fully fund the CAN as well as the IT replacement fund. On top of that, we're going to start implementing the repayment of those deferments. As I stated earlier, there will be an increase to the unfunded liability, the UAL. That number is going to increase to $33 million. There is going to be an additional increase to our city's insurance premium of approximately $500,000. We're factoring that in. And again, I want to state that this is not subject to Costa Mesa. All agencies and municipalities are facing increased insurance premiums. We are accounting for a one-time election cost that arise every 2 years, so we're factoring that in. And most importantly, we're factoring an increase to all of the labor costs as well. So, Kingsley, want to take the budget calendar on this one?
Okay, well, basically, we're coming to you, again, everything that Mike outlined in the previous slide. We're going to be presenting to you a proposed budget that incorporates all those factors. And so you can have a very realistic budget to consider when we come to you. First, we're going to present at the Finance and Pension Advisory Committee on the 7th of May. And we have a proposed budget book that will be distributed to the members as well as council members before we go to the Finance and Pension Advisory Committee. Then the proposed budget study session will be here on the 12th of May. The goal is to follow up with adoption of the budget on the 2nd of June. And we've also penciled in the item for the 16th in case council needs additional time to vet the budget if it's not possible to adopt it on the 2nd of June. So another meeting has been penciled in if needed for June 16th. So that's all we have, and then we can answer any more questions that you have.
I actually have some questions.
Okay, so those people that have not asked questions yet get first dibs. Lauren, and then Jeff.
Okay. I want to go back to some points that were made earlier, but before I do that, I just want to thank the two of you and your staff for what you've done so far in bringing this to where we're at today. I appreciate the effort that's been put in, especially right here, right now. So you had brought up that 40% of our revenue is in sales. Is that correct?
Sales tax.
So do we have a way of pinpointing from specifically what types of business or who is generating this? Like what percentage, say, let's use South Coast Plaza, for example. Of that 40%, what percent of that is generated directly from sales from South Coast Plaza? Do we have a way to pinpoint that?
So while we can't talk about any specific business, we can bring to you a high level of within each sector. For example, automotive sector, retail sector. We're not allowed to isolate any specific business or one building or one entity, but we can bring to you within this sector, there's some growth within this sector, within restaurants and dining, there's some growth or some pullback. We can do that for you.
I would really like to see that presented to us next time. Another question I have is when we're talking about budgets and we're talking about where we get them from, just for example, let's take emergency services in general. How old are the budgets that were created for them? How old are they? How old is say the fire budget? Is their budget 10 years old and they're working with a budget that hasn't been updated? Or how does that work, where they go, here, you have this much money you can use?
I think the whole annual budget process is creating a budget for every department every year. So to answer your question directly, it's a new budget every year. However, some assumptions could span a couple of years, where maybe you decide, as maybe, in some cases, you live within your means, you get the same budget you got last year because we don't have room to increase it this year. So it's not that old. It's an annual budget process. So you get a new budget every year.
So when we do allocations for the different departments, I would like to see if there's a way, I don't want to use the word pinpoint, but how we allocate those. And it's not just emergency services, but for multiple departments. How old are their budgets? How did we decide what their budget's going to be? Is it based off of prior budgets, what we think's coming? Just something that we can say, okay, now we understand, because I just want to make sure that our comparatives are not something from a long time ago, whatever that long time ago would be. And then I think in general, those were just the main two things that I really wanted to ask about. And like I said, I want to close and say I really appreciate, this is a heartfelt appreciation of what you've done and what you've came up with so far and bringing this to the council. Thank you. That's all I have.
Thank you, Lauren. Jeff?
Yeah, just a couple questions. Under cost containment measures, we talked about non-essential expenses. Is there anybody that could tell me what programs are non-essential and can be reduced, or examples of them right now?
Maybe non-essential isn't the right word to use, but what we're saying to the department in the cost containment measure is that to look at your budget and see what you could live with, as is or without, even if it's for 1 year. And most of those are not necessarily related to program or services to the citizens. It's the non-operating component of the budget. If it's training or something that perhaps you could push out for another year, let's do that. It's essential because you don't want to push out training for too long. Then, you suffer the consequences by, later on. So those kind of stuff, we're asking the department to sort of kick the tires and say, look at their budget again, given the circumstances. What are the things that you can live without or at least suspend for a year?
Yeah, I hope we have a bunch of those, because the reason I ask is because we clearly have a structural problem, if you want to call it a problem. 75% of our budget is salaries and benefits, and we ate up the cushion we had with filling all our vacancies, which is good. We're going to make sure PD and fire are staffed. But that tells me that we need to go after non-essential programs. Yeah. I mean, I can think of a lot off the top of my head. I'm not going to get into it right now because that's city manager and staff's business. So as of right now, there are, it's an idea. We can't point to anything. Have we actually done any reducing or programs specifically, and not just discussed it? Have we actually done any reducing?
Well, in the process that we're going through in developing the new year budget, we have been working with departments and looking at their budget to see what they can actually reduce. And we have some reductions, that have been proposed. But the direction from the city manager is that we're not looking to cut core services to the residents or citizens or businesses that we serve within the community. So in light of that, take a good look at your budget and see, what you can reduce. And I just want to explain or just comment on the fact that, yes, 74% of our budget is salaries and benefits. But that's who you are. Like every other city of Costa Mesa, you don't produce anything other than offer services and, to your community.
Right, no, I
And-
agree, sorry to cut you off, but what I hope to see maybe in this next study session would be I'd like to see a list of what we consider to be core functions, which we're not going to touch, and non-essential expenses. I'd like to see that in black and white, so we could see what fat can be trimmed, not conceptually, but on paper. And last question I have is, other potential funding sources, would that happen to be code for an increase in TOT tax, business license tax? Or I haven't heard that brought up at all. Are we still, because at one point we're considering that to close some of these gaps, are we still considering that? Because I certainly hope we would go after reductions and tightening the belt before we would ask the public to pay for
Yeah,
it.
I can speak to that.
An answer to that question. When we reference other funding sources, we're looking at our partnerships with our state and federal representatives going after earmarks. Also seeking and being very active in seeking new grant opportunities that will help relieve the general fund for capital projects, as well as private and public partnerships whenever possible. If we can partner with groups, nonprofit groups, or other private businesses in the community that will help the city meet its, objective, but also relieving the general fund.
Thanks, Alma. So I'm going to assume we're no longer thinking about tax increases, since it's not in here anywhere?
No,
Oh, okay, so that's the answer is no or yes?
no.
No, yes, no. All right,
So-
Mike, that's all I
Should
have.
not make that assumption.
Okay, all right, thank you. Just,
Mr. Mayor.
Well,
Yes.
and also because this is about 2026. Like, we're not talking about future years. We're talking about a budget we approved a year ago.
understood, I just wanted to, well, there's a lot of conceptual stuff in here about the future too. I just wanted to make sure
It's
we're.
not.
so
Where?
we're- Okay, we can forget about that for now?
No, there's nothing conceptual about the future in there.
It's,
Well,
what you're alluding to, I think, is whether we put a couple of items on the ballot, but those wouldn't hit the ballot until 26, so they wouldn't impact either obviously the 26 fiscal year or even the 27 fiscal year.
Correct. And beyond that, we are also exploring utilizing our different buckets with that bucket analogy. So we are looking at our gas tax fund, for example. What operations are we currently funding in the general fund that we can utilize those different buckets? And by going through this process, we've actually identified several different buckets that we are moving general fund expenditures to, these appropriate buckets. So some of those include gas tax, some of those include Measure M2 for the roads. Other things include capital. So we're realigning things that are appropriately, that should be categorized into the capital fund. And so we are also exhausting all of our efforts and not just looking at one strategy, but a multi-pronged strategy in stabilizing and balancing this budget.
Manuel?
Thank you, John. First time budget for some folks, it's all good. First of all, staff, thank you so much for doing this presentation. I really appreciate the effort you put into it, and I appreciate your answering my colleagues' questions about the essentially why we're a bit over when it comes to the hiring side. Obviously, PD being fully staffed is a good thing, and that's something we have to account for moving forward, because that was a goal we've had for a long time, and ensuring a good public safety is very important for our community. I want to ask a very theoretical question, because it's something that really comes to my brain. And I think Gameros, Lauren, kind of alluded to a little bit when it comes to our breakdown of our budget. Are we seeing any ramifications of the so-called K economy? Because, our city does have very high income residents and also very low income residents. Are we seeing any effect of that splitting the economies in our budget?
Yeah.
The K economy.
Yeah, so the K of economy that you're referring to is, that's kind of the sales tax portion of it. So that K is stating that the high earning individuals in the city of Costa Mesa is actually insulated from these $2 increases to gas tax. So their spending habits are going to go on as normal. But however, with that being stated, we do have a big base of our demographic here. 60% are renters. So we do have those households that may be impacted and have less discretionary spending. And so that proportionment, that's the K that you're talking about. Those lower earning households will be impacted by these increases in the economy. However, the districts that are bordering Newport may not necessarily feel the impacts of the $2 increase. And so, you know, you're going to have to look at it from that perspective, that people are going to be hurting, and then there's a big portion of your city's demographic that are going to still do well.
Okay.
Thank you.
Is there any way for us to, like, you know, I know Lauren asked this question, but is there any way for us to really break down where we get our sales tax revenue from? Like, I know for a lot of cities, ours probably included, like auto sales is a really important factor, and obviously the plaza has been a big boon for us. A lot of cities suffered during the pandemic because of the high stores there. We kept seeing growth in sales tax.
Yeah, we can definitely break it out by sectors. We can't break it down by individual businesses, but for sure, we can show you the changes within the sectors. That's something that we can show.
To interrupt, Mark, I think on our website, we post sales tax information as well. I think the last one that is on there is third quarter, July to September, and it will be updated as soon as we get the one on October to December. And it does show where we get our money, business type. As Mark pointed out earlier, it just summarizes it under, categories. Business type, family apparel, used automotive, jewelry stores, and that kind of information. It's out there, and we can provide council with copies of this too. But this is on our website, on the city's website as well.
Okay.
Yeah.
Thank you. I appreciate that. Since Jeff mentioned future taxes, I might as well just jump on that train. Do you guys know what our TOT tax is? What our tax rate for TOT is?
Yeah, it's 8%.
Okay. What other cities around us are a higher rate than 8%?
Majority of the cities around us are higher. They're in the 10% average, whereas our city is relatively on the lower end of the spectrum. There may be just a handful of cities in the 8%, but most of the cities are 10%, and then you have the outlier in Anaheim, which is at 15%, but we do note that they do have Disneyland.
Okay. Do we know where Santa is? Because they're our next door neighbor.
Yeah, Santa Ana, we can look. Do we have that number?
So this is like, we're going to have a whole meeting about
Yeah,
this.
there'll be a
So-
study session
Yeah.
for TOT scheduled for late May. So we can bring all of that information to you in May, in late May.
Yeah.
We do have that TOT study session scheduled.
Okay. Well, in that case, I'll defer my comments till then and questions till then. Thank you.
So I just have one other question. So with respect to reducing costs on, I think, you mentioned non-essential or just reducing costs in general. There are a lot of cities that are implementing AI to their processes. Is that something that we're looking at in terms of implementing in the next fiscal year? To your knowledge? Okay.
That's something that we can definitely consider and get back to you. We can
Yeah.
meet with our IT director, Steve Ely, when we come back to you with the study session.
That'd be great. To just, I know it'd be very preliminary, very high level, but I don't want to be the last city to implement AI.
Mayor?
Yes.
We do plan on coming to the council in a couple of months with a study session on the next 5-year IT strategic plan, where AI is a component of that. So we will have that discussion with the council on how we would incorporate AI into city operations.
Okay. One thing, just anecdotally, on the TCA, in our last budget, so this would have been the 25-26 budget, we set aside a certain amount of money to work on AI. And even though it's kind of counterintuitive with what we're talking about with going into core services and eliminating non-essential, sometimes you have to spend money to save money. So in the context, as we're talking about the budget, it would be very interesting to me to at least set aside some line item and some funding for exploring AI options. Okay? Now, let's go to the public, if that's okay. Any more questions? Everybody can ask questions after you.
Yeah, let me ask a few more questions.
Please.
Okay, so I'm looking at attachment 1 to our staff report, which shows dollars for an adopted budget, dollars for an amended budget, and then some of the projections we're looking at here. I may have missed the meeting. When did we do an amended budget?
So
I don't recall.
the amended budget can happen, so ideally, typically, an amended budget happens with council. But there are certain times when the budget can be amended, like in the event of a reimbursement. So when you get reimbursements from certain areas.
Let me just put it this way, you can adopt a budget as the year progresses. If an individual item comes to you and it has a part of the action there for you to appropriate money, that's an amendment.
So when we're
So for-
accepting an award or a grant that we received, okay.
No,
okay,
yeah,
so-
so all of that, could be,
Okay,
is
so-
considered
so-
amendment. It's just an accounting term.
Are the
you know.
changes, are then the difference between the amended budget and the adopted budget are because of maybe one or more council actions to accept funds?
Yeah.
Okay, but we didn't
yeah.
vote, okay.
No, it's not.
I couldn't
It's not
remember that.
It's not a formalized. Just we're bringing you budget to amend. It occurs every council meeting. Whatever decision you make to appropriate new funds or whatever, that's an amendment.
So it would only be amendments, okay, so all the changes are still associated with council actions, and I think my comparison here is that these are all just increases, so that's consistent.
Yeah.
Okay. On the revenue side, we're projecting $6.9 million increased revenue compared to our adopted budget. My understanding is most of that is from a better sales tax year than we expected. We very intentionally were very conservative. But my understanding from the staff report is that that's based on, real numbers through March. So there's 3 critical months in the end of the fiscal year where there's a heck of a lot of uncertainty.
Yes.
Right? So what is your level of confidence? How confident should we be in that 6.9 million number, given the challenges right now faced by the global economy?
Well,
And real numbers, as I understand, only through March. So we have April, May, and June. Okay.
the numbers that we have there, remember, I call it the big two that you have, sales tax and property tax. We don't rely on ourselves. We know little to project. We have a consultant, HDL. That's all they do for a lot of cities in California. And the numbers that we're incorporating here are based in their informed knowledge, analysis. That
How confident should we be that this is going to land?
I've been in this business for a long time, and HDL has been the go-to consultants on sales tax and property tax, and every city relies on their numbers. And they have been 9 times out of 10 correct.
Yeah.
At least directionally, very closely correct.
Okay.
So that,
So the
I think,
6.9 considers, like, how recent is it in terms of global news and impacts from the current state of the
Yeah.
global economy? I just want to make sure that these numbers aren't tied to actions, sort of assumptions predating some very significant global changes.
no, I think this as a matter of fact, I think there's a meeting that will occur with HDL
Later, in a few weeks or so.
next week. We will have updated numbers as well, because we want to use those numbers to inform the budget proposed budget that we present to you in May. So if any of those numbers, we have any kind of surprises, we will update this as well.
What would you consider a surprise?
I will consider any negative downturn a surprise.
Any negative downturn?
Yeah,
Okay.
right now, sales tax is billed as being resilient, even though all this stuff is happening with tariffs and all of that stuff. The main thing is that consumer confidence it's, unsettled, but we haven't seen any serious decline in consumer confidence. People are still buying. If you go to Costa Mesa Mall, just an anecdotal indication there, the car park is not empty.
Shopping center.
The shopping center.
The Costa Mesa Mall. Little thing down
Well,
the street.
sorry
Yeah.
if I said the wrong one.
Yeah, the local mall. Okay, so I'm not hearing you say be confident. I'm hearing
Well-
you say the best numbers we have, and we'll have better numbers next week.
We'll have,
And that you'll let us know
yes,
if
of
there's any
course.
surprises with the numbers next
Yeah.
week. Okay, that's enough.
If these numbers change, we'll be.
I know.
at
My
council.
colleagues know I have a lot of questions, so I'm going to try to get through them fast. Okay, I'm still on attachment 1, where we do actually have data that allows us to drill in a little bit more and understand what's driving the higher than budgeted spending. And I'm curious what previous years look like and how different this is, but parts of this do look surprising to me. So I'm seeing in the police department, $10 million higher than budgeted. In parks, $2 million higher than budgeted. I'm seeing non-departmental, $7 million lower than budgeted. So I'm assuming from the previous conversation, the police is about hiring and overtime.
And the attrition factor. So you have to take into account the attrition factor in the police. So
Sure,
if-
so it's because of
Yep.
additional
It's
hiring
attrition.
and $4.5 or $4.8 million additional overtime than budgeted. So $10 million higher than budgeted in the police department. What's driving the $2 million higher than budgeted in parks?
So Parks has a disproportionate number of part-time, and so we are looking at that as well. So there are part-time expenses in Parks. They do have a small attrition factor, and
So did we do a lot of hiring in parks
there
compared
was
to previous years?
there was a lot of hiring, not this prior year, but a couple years ago. Yeah.
But this is at $2 million in the current year. Okay,
I
if you don't have that number, we can follow up on
I can
that.
share
Yeah.
a little more color to the conversation. I believe it was about 2 years ago, we had a high turnover in the Parks Department. So in order to incentivize employees to stay, part-time employees, because they were leaving to go to restaurants such as In-N-Out, where they were making $20 an hour, $21 an hour, we were paying minimum wage. So at that point, leadership took an initiative to increase the salaries of part-timers, and we did a job fair that we were really successful and were able to fill those vacancies that were vacant for a while. So,
So we have fewer vacancies in parks than we used to.
yes.
Okay. $7 million reduction in non-departmental. What is that?
That includes, there's some legal costs.
Your mic's not on.
So there are some legal costs that we can move out of there. This
Where are
is
we moving the legal costs?
to a self-insurance fund. We have a self-insurance fund.
Is that not on this page?
And we're also moving, it's not on, because it's a separate fund, we're talking about general fund. We're also moving out a cost for the Fire Station 2. So we have Fire Station 2, so that's going to be moved out as well.
We budgeted that in non-departmental,
In non-departmental,
and we're moving it to,
the capital, because that $1 million was set aside for the bond repayment. And so since we're not making the bond repayment, we're going to provide that budget to the capital improvement fund to pay for the reconstruction of Fire Station number 2
and how are we paying for it in capital?
in capital.
How are we paying for it?
It's a combination of capital, and we're going after a bond currently.
So we're going to see our CIP final budget higher than planned?
Yeah.
Because we're moving money into that bucket?
Yeah,
Okay.
correct. Yeah.
Those two legal costs and non-departmental explains the $7 million.
Legal costs,
Reduction.
non-departmental, and we'll look at a little bit more. Some of it includes a reduction to some of our operational costs in there. So we're finding places to, there are some small operational costs that we're going to move out of non-department into departments that can handle it or better funded for it. So within that fund, we do have some Snoopy House costs out of there as well. But we're going to move some of it because we received some grants or some sponsorships for the Snoopy House event from private donors. And so we're going to use those funds in order to offset those costs.
Okay, yeah, I think it'd be helpful. I don't know how detailed the information is in our budget book, but I'd like to know what was included in the adopted budget for non-departmental that is being moved out or otherwise reduced.
And,
that's a big chunk of change that
sure.
I don't fully understand right now. Okay. Okay, thank you.
Andrea.
Thanks. Can we go back to sales tax? So if I'm understanding, year-to-date actuals is 47 million, but is that with the 2-month lag, or is that truly out of March 31st?
That 47 is actually just, I believe, up to February, just to February.
Okay.
So because of the 2 months in arrears,
Yeah.
you haven't seen the picture of what March and April looks like yet. And so our consultant, HDL, will provide us some better numbers based on what they see and what they forecast. However, these numbers do get, and so you won't even see June number well until the end of the fiscal year. So they won't come until August, for example.
I mean, that's what makes me nervous, to be honest, right? It sort of seems like a lot of this is hinging on sales tax being as high as we need it to be. 47% out of 81 million is 58% or so. So even with that 2-month lag,
Well, that's,
what am I missing?
all right. A better picture, we could have shown same time last year. You know, it comes in that way. There's a 2-month lag, but understand that also the projections are, again, this is from our consultants, but the projections are such that when we receive it in August, they will be accrued back to this fiscal year.
Yeah.
So we make sure we are accounting for 12 months every year.
Yeah.
So,
Because I'm assuming the 80 million number isn't 80 million received in sales tax as of June 1st. It's 80 million received, including that
And
accrual.
it's not proportional as well, Councilmember Marr, because in June, there's also a reconciliation that happens. So the retailers that underpaid during the year, all of those reconciliation comes in a big drop in for the June as
Okay.
well. And so you're going to see that. And so it's not going to come in evenly throughout the year. Yeah.
It still seems like we're
Yeah.
expecting it to increase, but currently lagging behind. So, to Councilmember Reynolds' point, it might be helpful to see what that was in previous years too at this point in the year. Okay. And then we've mentioned self-insurance a couple of times. I mean, and then slide 16 shows self-insurance sitting at 2 million for the last couple of years. My understanding was that we had effectively depleted self-insurance the last couple of years due to lawsuits around, I'll just say various lawsuits that we've incurred. So I thought all of that had been coming out of self-insurance. Did you say earlier we're using non-departmental to top up self-insurance? Is that the swap?
So let me clarify. Non-departmental is used to pay for legal fees for sober living. Okay? So that's the unique non-departmental budget item. That amount is budgeted at $1.5 million. When a settlement payment happens, it's paid out of the self-insurance fund. So legal fees are paid for the attorneys, and the legal fees are paid out of non-departmental, and then the settlements are used by self-insurance fund. However, within the self-insurance fund, we do account for cost at the end of the year. We create a reservance at the end of the year to capture not the full cost of what the city outstanding payments are, but the most likelihood of what we're going to pay out. And so that is accounted for at the end of the year.
Okay.
So, Councilmember, if I may add, the $2 million that you see here within the general fund reserve, that is in addition to whatever is situated in the self-insurance fund. Okay? Because you have the workers' comp, 2 million there. In the internal service fund, the risk management fund, it's a separate fund, and it has some balance in there as well. But this $2 million is what's captured in the council decision at some point to set aside this $55 million reserve, and this $2 million is a component of that. So this sits in the general fund as an additional reserve.
Yeah.
And same amount. Yep.
We're not going to end the year with $2 million still in it, right? Because we've had to pay out of it. This is what I'm not understanding.
No, when we
it's fine to budget $2 million at the beginning of the year, but then we spend it, right?
No, this $2 million just sits here, but for budget purposes, you budget within the non-departmental and you transfer that into the internal service fund, from which, insurance premiums and all the risk management expenditures are paid and tracked.
Okay.
Yeah.
All right, that's it for me, Mr. Mayor. Thank you.
Thank you. Okay, public. You get 3 minutes. I'm tempted to give you 4, but you have 3. All right. Hold on one second. There you go, Ralph. Thanks.
Good evening, Mayor, Council. I want to thank staff. A lot of work put into this. And I especially liked the comments from Mark, especially with his conversation with Councilwoman Reynolds. I like the idea, and that's what should be done, is you price out the 599 full-time heads, and then you deduct out whatever you're going to use for vacancies. Actually, over the last number of years, the vacancy factor has been used to balance the budget. That $4.4 million has stayed pretty steady for the last 4 or 5 years. You could never equate it to a number of people, number of employees, and that was part of my frustration. How many heads is that? You couldn't do that. So I would hope that in this next year, you work out what you think the vacancy is going to be, the number of heads, and then you do the math and come up with a vacancy factor. Overtime, that's been an issue for years. Yes, the overtimes have been remaining steady at 8, 9, 10 million. Problem is the city's been budgeting, 4 or 5 million? So you have a built-in overrun. I never understood that. Also, I know council's probably tired of hearing about pensions, but there's 2 halves to pensions. There's the unfunded portion, and that's what staff talked about, that $31 million, and there's a funded portion. And that's what gets paid to CalPERS every pay period from all the employees. A portion of their salary goes to CalPERS for pensions. That, I believe, and Mark, tell me if I'm wrong, but the $31 million was forecasted and budgeted. That's not overrun, but it's the funded portion of the pension that is overrun. That's the $2 million that Mark mentioned as part of the $8 million total salaries and benefits. With that, the fire station number 2. Okay, that $1 million is going to capital. Does that mean the bond is going to be reduced from 12 million to 11 million? Question. And I guess that's it. But some of these questions, I'll have more questions in our 5-pack meeting. Thank you.
Thanks, Rob. Anybody else from the chambers? Anybody on Zoom?
No, Mr. Mayor.
Okay. Closed public comment. Are you sure you don't want more time, Ralph? Yeah. Okay.
Mayor, can I jump?
Hold on one second. Let's just go down the row.
Okay.
And then you all can make comments, questions, and then we'll adjourn. Go ahead, Mike.
Thanks, Mayor. Thanks, John. Yeah, just a couple of comments and then one little area of curiosity inquiry. First off, Kingsley, you commented on, well, we have some good news, and you guys sounded a little dejected down there. I just want to say there was a lot of good news tonight. It looks like we're heading towards a balanced budget. It looks like, yeah, we have some areas we can drill down on and look into. And I know these conversations aren't pleasant, but they're good conversations to have. They're good questions to ask. I like the response, and I don't think we need to have any hangdog attitude about it. I appreciate you guys stepping up. I appreciate you guys being prepared tonight, and I appreciate everybody's input. So I just wanted to make that comment. And then just a couple observations, on 19, slide 19, where it says, it just occurred to me, it says IT needs funds. When I first read that, I thought it needs funds. I think they definitely needs funds. I also appreciate city manager and the department also on 19, and kudos need to go out for, I think it's the forward thinking of getting ahead of this and going to the departments and asking to drill down and look at where we can make up to 5% deductions. Kudos to that, and I think that's kind of long overdue. I think oftentimes we come here, and heading into my second year, but we get in here, we find out, holy, you know what, we missed the mark, and we're looking at a $9 million budget. Now, how do we fill it? How do we fill it? It hasn't been a proactive approach, so I appreciate this foresight, and I just wanted to commend city manager and staff for that. And then just a philosophical thought, this is sitting around having a beer with somebody and throwing this out there, and I happen to have some smart accounting people. When we look at the revenue side of the ledger, everybody just kind of looks at property taxes and you enter that column and you move on as though it's a static and not changing thing. And it just seems to me, and we got HDL, and maybe they've done this when they project out or whatever, but Costa Mesa in particular seems to be a community where we have a large asset portfolio in regards ownership and real estate, and you derive your property taxes based on the valuation of these homes at the time they were purchased. Some of those homes, 10 years, 20 years, 40-year homeowners, and you can imagine the step up. And there's a lot of these people who've been living in those homes for a great deal, a lengthy amount of time. And it occurs to me to be curious to see what's the total value of that asset portfolio as currently valued? And what would be the value of that asset portfolio if everything stepped up to market rates? And you look at the current age of some of the homeowners in there, and what's the likelihood, has somebody done an analysis, what's the likelihood that there's going to be turnover? Is there going to be a 2 or 3% turnover in the next 2 to 3 years? Or, I love my folks, and I don't want to sound dark here, but they're 85, 86, and we have a lot of older community. Is it unrealistic to project out what's that turnover going to look like going 10 years out? And I just wonder if that type of analysis has been done rather than we just check the box on steady, regular property tax revenue. And is there a potential for a tsunami effect in the next 2, 3, 5, 10 years? And we're going to see substantial revenue generated when those property values change hands and they get up to market rate. So those are just observations. Thank you guys for all your work.
Thanks, Mike. Lauren?
Yes, thank you. So I do want to bring up a few points that were brought up during the evening in the study session. The first thing is, my understanding is that all departments are trying to target 5% in reductions. I think that's a very big deal because one of the other things that was mentioned is that we're fully funding the CAN. And I believe, Mark, you brought that up. So I want to thank staff that you're willing to take some hits and some losses and like the term says, tighten up our belt straps. That 5% goes a long way, and I want you to know that that does not go unrecognized. Additionally, a point was made that I thought was very interesting. one of the metrics that we can judge a city by which we define a high standard of living, is the fact that we have a funded emergency services, police and fire department. And I'd like to add to that public works as well. Those three things, when someone wants to move into a city, they look at those types of things. So I just want to also bring that to our attention and say thank you because of those things. We do have a great city that we live in, and you guys have taken on quite the task here. So thank you and good job. I appreciate it.
Can I go real quick, John, before Arliss and
No,
please?
we're just going to go down the road.
Oh,
You have to
okay.
leave?
No. I just
Oh.
wanted to get in there before.
Well,
I
let's
get
go,
started
no, let's go
going
down the,
outside.
no, let's go down the road.
Okay.
Go ahead.
Yeah, I mean, look, just following up on the last council member's comments, to be clear, I said this before, but like the police department is fully staffed, fire is still not fully staffed. So we're going to talk about like wave the banner that we've now fully staffed public safety. I just want to be clear, like one of the two departments is fully staffed. So we should be careful in our language there. Things we didn't talk about tonight. Cannabis is projected to be down this year. We basically put our planning department on hold for 1.5 years so we could get cannabis through, and we're seeing fewer sales tax come out of it now that we've got more permitted shops. I'm concerned about that. I don't know that we have a plan or we can actually do anything about it, but it's something we should probably talk about in the next study session. During the last council meeting, we approved the 2-year extension to our ambulance provider contract. I'm going to meet with the chief to talk about our current model. That was something that we rolled out right when I was first elected. I don't know that we've kind of brought it back for any tweaks, revisions, opportunities for improvement. It's something I'd like to understand. We are making a profit on it. It looks very positive. I think it's increasing slightly year over year, but it's something we should dig into a little bit more. I do get nervous when we start using language about non-essential expenses. I think my definition of non-essential is probably not the same as every other council member's up here. I think some would say that like our parks aren't essential, right? So how do we define those things? And again, how are we careful about our language such that the things that we are supposedly cutting and reducing are not actually the things that make this community what it is? I look forward to the next council meeting or the next study session because I do think it's going to be really important to explore TOT and business license and some of these levers that we have as a council, as a city that we have not exercised in the last 8 years, and should look at those opportunities fairly. And then last but not least, and I will not harp on this anymore, but I do expect, I was looking back through previous budgets online really quickly. There are times when we have come in pretty differently from what our adopted was, our adopted and then what our final year end is. In most of those cases, I think we reconciled it mid-year, right? We said, hey, we actually want to add a bunch of positions and we think we've got extra sales tax to do it. Or we said, hey, it's not looking good. We're really nervous. This happened during COVID numerous times. We're really nervous about what the overall economic condition is. We're going to step back, right? We're going to say maybe we pause on some of our hiring. And that's when we've made the adjustments. To do that in mid-May makes me nervous. I know some of those circumstances were outside of the city manager's control. But like I said earlier, like I don't have the ability to check on the budget regularly. This is what I have. This is what the community has. And so I think we need to do a better job of that level of confidence that the numbers are what we say they're going to be, that we come in close or we've got really good explanations about why they're not. And I don't know that we were quite there tonight. Look, I know this is hard. I know we don't have the systems in place to make this any easier. And it is something that if you wanted to talk about during the next study session, I think might be helpful because I know we were in the process of trying to roll out some new software and some new mechanisms. I don't know where we're at on that. If you're still working off of spreadsheets that crash on you regularly or if we're close to having a system that works well, but I'd like to understand that because I do recognize for staff that this is not an easy process and we need to continue doing the things that, again, are not sexy, right, but make your life easier and make it such that we can get that data that we need more instantly. And maybe some people would call that non-essential, but I think that is essential. And then I've talked about this from the dais before. As we think about future budgets, the capital improvement projects, the CAN, sometimes gets lost in the conversation. Either we spend a whole meeting just focused on it, or it's like part of $180 million, and so we're not focused on the $4 or $5 million that we might dedicate. But we have to think about our facilities. We have to think about how we're going to maintain just the brick and mortar of the city for the long term. And the report that we got, correct me, Ralph, but I think showed a need for $10 to $11 million a year to maintain the facilities that we have right now. And so we don't have the budget for that right now, but it would be nice to think about a long-term plan that put us in a position where we were better able to maintain what we've got right now. That's it. Thank you.
Thank you. Do you want to go? Oh, okay. No, why don't you go, Manuel, and then we'll go Arliss, Jeff, and then I'll.
Sounds good.
Wrap it up.
Thank you, John. Yeah, I'm trying to I don't know. It's all good. It's a busy day in my head. Couple quick hits. Nothing really in order in particular, but just want to say a couple of things that come to my head. First of all, staff, again, good job on this presentation. Really appreciate the fact that we are going to be a balanced budget. And again, it kind of demonstrates in some ways the rising cost of things this past year. Having much more sales tax, very luckily coinciding with rise in our own costs internally. So just to begin with that framing, I agree with the mayor that we probably should relook at raising the revenue, aside the reserve amount. It just seems very fiscally prudent. $60 million, it's nice, but in a real budget situation where we have a sharp decline in sales tax, that probably won't be enough to get us through the year. So for that point alone, I think we should be looking at raising that number up. I do think the K-economy analogy I mentioned earlier is we are starting to see it. I think cannabis is actually an example of that because it has declined from last year. One thing we've seen when looking at cannabis throughout the country and throughout California and really Orange County is the sales tax percentage rate kind of stays the same. It might shift to certain cities if new cities open up cannabis dispensaries, but generally speaking, you don't see a real growth in that number. And it kind of makes sense. Most folks use cannabis. Most folks that, not a lot of numbers are going to start using cannabis per se. So that to me is an indication that we are probably going to start seeing the lower quadrant or lower half of our economy in Costa Mesa tighten the belt a little bit. And I see all the time in my district when I go put gas, it's common to see in the stalls that someone may put $20 instead of a full tank of gas. So I think we should start preparing ourselves for the long-term ramifications of the global state of affairs. And alongside that note, I don't think we're really going to see the impacts of that in Costa Mesa probably until after the holiday season. A big part of our budget is sales tax, and a big part of that is Southwest Plaza. And I call Southwest Plaza out of respect for the fact that this is a center that gives us much money to our communities. And as I told my residents all the time in my district, we need Southwest Plaza to succeed because that's what funds our parks and our community. That's what funds the street sweeping and funds the quality of a road. So I don't think we're going to get the full picture until after a majority of us are off council, because we're going to see those numbers real raw effect after the holiday season. And that's why I want us to be looking at raising the reserves while we have a chance, because I don't want to be caught flat-footed when I'm no longer here and Dias is brand new with new council members. On the PD portion, I think we had a really good, robust conversation about them being fully funded and why that's good for the community. One thing I will share when speaking with Chief is that it seems like we have not followed best practices in terms of accounting for police overtime. There is going to be times when officers, to maintain the level of service our city requires and demands, need to do overtime. And I think it'd be really smart for us to just really understand that and put it in our budget somehow. Because, again, as we are having less attrition rate, we're not going to have those savings anymore. And I do think we fall in a habit in using that attrition rate or those vacancies to not show the real picture of the budget. So that to me is something I think we should do moving forward. And then finally, and I know we're not talking about sales tax right now or any tax, but I just want to say off my chest right now, most city budgets have always been historically overhead costs of employees. 70% of our budget is employees. And we've seen today that, I guess the expectation of our number of employees is that every year we need to have $6 to $7 million more just to pay for the increases to the employee cost. I also think to Andrea's point, let's just be honest. We're either going to find more revenue or we're going to find ways to have less staff to do the same amount of work. And I just want to be very frank about that, because when we had this conversation about no taxes or cutting back in employees, or sorry, cutting back services, what we're really saying is employee headcount. And I think that should be stated firmly. So I'm not going to say no to any new revenue sources, because I know if we don't get that, that's probably going to be us not hiring folks in park and recs, and us maybe having to prioritize not doing street repavements. We've seen this past year how a lot of facilities are not up to date. So that's probably the first thing we're going to cut in terms of saving cost measures. So I just want them to be an adult in the room and understand that we need to have hard conversations, and that little slogans are nice for campaign shows, but when it comes to governing a budget, looking at looking at an uncertain situation, we have to be pragmatic. We have to start saving money. We need to be realistic about modernizing ourselves to make sure that we're not subsidizing other businesses through our own taxpayers' dollars. Because everyone in Costa Mesa wants a new park. They want it in Noon Park, they want it in Brentwood, they want it in my district. And the reality is, we're going to be helping those folks get new equipment, or going to be subsidizing businesses that could be paying more. So thank you.
Thank you, Manuel. Arliss?
Yeah, I'm looking forward to the next budget very much. There are some fundamental questions about the current budget that I'm stuck on and will be following up on for answers to. Council adopted a budget that was $187 million from our general fund. And what we have in front of us is, hey, we're projecting to spend $194 million. It's a $7 million difference that never came to council. I'm concerned by that. How could that have gone higher? I'm concerned about that. We spend a lot of time on council looking down to the $10,000 here and $10,000 there, but there's a $7 million swing that we did not have input on. I'm concerned about how that happened. I'm concerned about whether controls were not followed or whether we don't have controls in place. We got lucky that there's also $7 million coming back in through extra revenue. This would be a very different conversation if we did not have positive extra revenue, which we're counting on, and we'll know in a week if that's still projected. I just think that I'm stuck there. And so if you can answer tonight, great. Otherwise, I want to know what controls are in place, because those decisions, $7 million in extra spending, need to be council decisions. I'm assuming that's money we can't undo right now. So that's one. And I think that's critical. If there are policies in place to make sure that there's daylight on that spending and council approval and public input on $7 million of unbudgeted spending, we need to get those policies in place. When we look in the numbers, we can see that there's higher overruns in some places that are being compensated by reduced spending in others. We talk a lot about the importance of streamlining and supporting our development services department, but this budget is showing $400,000 reduction in their budget. I don't know if that's consistent with the needs that we have to support that department and all of the economic activity that is, I think Councilmember Chavez made this point in the last time, or previous conversations. The sooner we can get permits out, the sooner we get revenue in. I would hope to see extra spending in that department, if anything. So I'm concerned about the swings that we're seeing here in adopted versus projected, or even adopted versus actual at this point. If those swings net out, okay, but those swings are adding up to $7 million extra spending that council did not approve. I've mentioned this earlier, I do want to understand what is in our budget, especially that non-departmental, what was in our budget that we are not funding or that we're moving somewhere else to compensate for that $7 million net increase in spending? Or I guess more than that, right? Because some of that's compensated by our additional revenue. And then, the flip side of that is we've often, despite previous difficult economic times, we've often, been at this point in the year where you are bringing to us nice surprises to say, hey, revenue was better than expected. And I wish we were in that place where we said, hey, we budgeted really conservatively, we have $7 million extra revenue. What do you want us to do with that, council, right? Like why are we not in the position where we're saying $7 million is great, we can fully fund our CAN, we can invest in some additional park projects, whatever, right? But that should be a council decision. $7 million in extra revenue compared to an adopted budget that the council or the public don't have input on. I think that's a problem, and I'm actually a little bit surprised that that's not more concerning and more part of the conversation here. So my biggest takeaway is what controls need to be put in place to make sure that this doesn't happen again. It doesn't mean we don't decide to spend more than we budgeted, but those decisions should be made by our council with transparency and with public input. Yeah, I'll stop there.
Jeff?
Yeah, I heard some good things from everybody up here tonight. I think I'm with you, Arliss. I think that we're being told that we balanced the budget or we're balancing the budget, and it was really just a lucky break on the sales tax. 75%, again, I've said a structural issue with 75% of our budget being staffing, salaries, and all that good stuff. To me, that's not flexibility, that's exposure. And so what do? We have our major part of our revenue source is what? 40% sales tax, 30% property tax. I think I think one thing that doesn't come up a lot is we aren't passive observers of how sales tax and property tax is going to come in. We're the city council. We run policy. We can impact those things, and we should impact those things through the policy we put forward. I look at the property tax. I drive around the east side, and I see all this development taking place, houses being torn down and built, Trinity Broadcasting. We should be killing it in property tax. So I agree with Councilmember Reynolds when we look at staffing. Maybe I don't know, temporary hires in the economic development department if we're falling short on permitting and things like that and getting stuff built and through the process. When I brought up the TOT and the business tax, I understand that's not something that's going to impact this current fiscal year, but really what I wanted to bring it to the fore because it really goes to my bottom line that if we do not control spending now, we're going to be forced to raise taxes later. And the responsible approach is clear. It's reduce, prioritize, and stabilize before we ask the public to pay more. I'm just bringing that up now so I can sleep at night. Thank you.
Thanks, Jeff. So, yeah, it's a good job, very good job. Thank you very much. It's not easy to deliver news of any kind financially. Expenses going up and uncertainty in the world and how that might affect us. And I thought you did it really well. I think one thing to consider is if you look at Fullerton, Orange, even the great Irvine, Santa Ana, the county of Orange, they're having much different conversations. They're having different conversations because they have, in fact, a deficit. And so they're seeing that. As Mike said, there's a really lot of good news in here. I mean, I have personally been, ever since before I got elected. So this is when I knocked on people's doors in 2016, I said, we will increase the number of cops. I mean, I've still got the flyer that I handed out to people, and this has been a goal of mine for 10 years. and now we're fully staffed in the police department and doing great things with technology. And to no surprise, crime is down. So that's great. And it takes money and decisions by this council and then a ton of work by HR and the police department and then the community, each person in the community to show appreciation and support for the PD and having recruits see that. And one of the things that's embedded in this report is one of the things the council did in working with the POA last year is we put in an incentive program. So a lot of the recruiting came, according to this report, from within the department. So thank you to every single rank and file person in the police department that brought one of their friends or family members in. This is an extraordinary achievement. And when you think about where we were with the image of PD after George Floyd and where we are now, it's amazing. And so thank you. Great news. By the same token, I am on all these Instagram whatever feeds, and one of them I have is from Fullerton. And they had, one of the council members was talking about with one of the staff members. Now imagine this, they're talking about their pavement condition index, which again is the PCI, something I talk about a lot. Ours is the third highest in the county, and the county is the highest in the state, so we're among the top 3 or 4 or 5 pavement condition index in the state. Our Public Works Department is rightfully very proud of that. You could see that as you drive even from Newport Beach to Costa Mesa, even when you drive from the great city of Irvine to Costa Mesa, you see nicer streets in Costa Mesa. Off budget, Fullerton, according to this crazy reel that I'm on, $200 million that they have to put into their streets to increase and improve their roads. They can just maintain their roads and they're going to continue to deteriorate. In part, that's the can, but I think that has nothing to do with it. I think it has to do with the department that we have and the leadership we have in our department and people that we have working every single day. When we talk about sales tax going up, I don't think there's an old saying that luck is opportunity meeting preparation, right? And when I think of all the people that put their feet on the ground in the private sector, when they wake up in the morning every day and they come here and they work their butt off, right, to generate that sales tax. Costa Mesa, we have 112,000 people. On any given time during a day, there's 300,000 people in the city of Costa Mesa. And those are people that are working and spending and working and spending and working and spending, and then often going home to the crappy streets in their city. But thank you to them. Thank you for the visitors. I mean, Travel Costa Mesa, are you kidding me? The hoteliers. We had a presentation recently here by Travel Costa Mesa, Paulette Lombardi-Fries, that said, something like $4.5 million a year is generated just on tourism. And I'm on the board of Travel Costa Mesa. I know how hard they work. I know how diligent they are. And they work, again, every single day to bring people into the city. So thank you to them for that. As for cannabis, my reading of this is that cannabis is not going down. It's actually flat. I'm not satisfied with that. I think, though, if we're going to have a conversation about cannabis, it should not be about just complaining about cannabis and that we should have never done it in the first place. And the 65% of the voters that voted for it were not right. And it was a total waste of time. I think the conversation should be those members of that industry who, again, put their feet on the floor every day, go in and work at those cannabis places, and how could we improve their revenue? How can we deal with smoke shops that are selling, and this is, again, thank goodness we've got our PD here that's fully funded, and our code enforcement, let's go after those smoke shops that are selling things that shouldn't be sold at smoke shops. What can we do? Let's engage the cannabis retailers and see how they can improve their sales. And I promise to do my part. in the next fiscal year, I will consume more cannabis. So if nobody has anything else, we're adjourned.